Hello traders, welcome back to my channel. Today we are going to analyze how did I manage to book 100 points profit in Bank Nifty option with a risk to reward ratio of 1:3. Here you can see the chart of Bank Nifty 45,700 call where I have placed my entries at around 267 and exited at around 372. So without any further ado, let's jump into the spot chart and analyze what was my thought process and how my bias changed from bearish to bullish in order to take this trade. So this is the spot chart. Here you can see that I have placed my entries soon after this bullish breakout. You might think this is just a simple bullish flag pattern breakout and I have placed entry, but believe me traders, there is a lot of complexity involved in this trade in order to take this setup. So let's jump into the 15 minutes time frame where we are going to see how the market trapped many of the retail sellers. So this is the 15 minutes chart. Here you can see that asset was in a continuous bearish structure, creating lower lows, lower highs, lower lows, lower highs, and so on. But even after asset was in a bearish structure, I managed to take bullish trade and book profit. That is because we are analyzing half of the data. Let's analyze a few more. Let's scroll the chart behind and analyze some more data. That is from over here. Here you can see that asset was in a bearish structure, creating lower lows, lower highs, lower lows, lower highs, and after this lower low, asset failed to break this particular lower low and created a new higher high. Now this is called as a shift in the momentum, called as shift in market structure from bearish to bullish. Now from here onwards, asset will be trending into the bullish structure, that is higher low, higher high, higher low, higher high, higher low. Now let's analyze when the market structure changes. If the asset breaks this particular zone, this particular swing high, if asset manages to sustain below this particular swing high, then we can say that asset is in a bearish structure. Now here you can see this particular candle, that is this hammer candle. Asset failed to give a breakdown and sustain below that. Instead it created a long wick. This also continues to be in a bullish structure. Now we can see that here asset made a strong red bearish candle. Now this bearish candle gave closing below this zone. Now the thought process of the majority of the retailers have been changed from bullish to bearish. Even including me, I had changed my thought process from bullish to bearish. That is, after any breakdown over here, we could have entered into the sell setup. But there was one contingency which stopped me from taking the bearish setup. That is, if we apply Fibonacci from this particular swing low to this particular swing high and let's extend it. What does it say? It is very clear that price is exactly near 50% Fibonacci level. If somehow price was trading near 61.8 level or below the 61.8 level, then we could have considered into taking the bearish side setups. But because of this contingency, I was stopped to taking bearish setup. This was not just one, there was another contingency which I will be explaining you at the end of this video. So stay tuned. Now let's jump into the 1 minute time frame. In 1 minute time frame, we can say that this was the entry, this was the today's first candle. After that, asset gave a strong bearish rally and broke this zone. After this, it gave a first breakdown. Now no matter this was a breakdown, we could have entered into this trade. But for the retailers to get trapped, there was another contingency, or we can call it as another confirmation for the sell side setup, and that also lies in the 15 minutes time frame. Now let's jump back into the 15 minutes time frame. And that is head and shoulders pattern. Now this is the left shoulder and this is the head and this is the right shoulder. Now after this pattern, we can see that clearly asset gave a bearish breakdown and we could have entered on any bearish setup. But what was the reason that stopped? Because in 1 minute time frame, majority of the retailers might have missed this trend because it was very early in the day. It is around 10:17 and many of the retailers will wait at least 10:30 to take any trade. That is because retailers are in a thought process that let the market get stable and then we will enter. Even I am a retailer and I was into the same thought process, so I was just waiting for another bearish breakdown. So bearish breakdown happened exactly over here. But here comes the second contingency which stopped me from taking bearish side setup, and that also lies in 50 minutes time frame. Now this is the 50 minutes time frame, and that contingency is this particular red candle. Now just give a clear look at this red candle, traders. It is a hammer candle. Now what does hammer candle suggest? Whenever the hammer candle is formed, it suggests that the trend is weak and it is not going to continue in that particular direction. In case if this red hammer candle was formed just like this strong red candle, then we could have definitely entered into this bearish side sell breakdown setup. But because of this hammer candle, I stopped. So my two contingencies are fulfilled, that is this hammer candle and 50% Fibonacci level. Because of this, I stopped taking this sell side setup. Now let's jump into the 1 minute time frame. What does the majority of the retailers might have done? Let's think into the retailer's perspective. They might have taken the sell side trade somewhere over here. Some impatient retailers might have kept the stop losses just above this level, and some smart retailers might have kept the stop losses somewhere over here. And there are some over smart retailers, I can call them. They will definitely keep the stop losses over here above this particular swing high. But remember traders, in intraday traders, never ever keep stop loss that is this much big. If you are doing it as a BTST or as a swing trade, then this kind of this much amount of stop losses work, because the 1:2 risk to reward ratio also will fulfill in long setups. But what happened? Eventually, these impatient retailers are stopped out, and after that smart retailers are also stopped out. So that is why I did not enter into the sell side setup, because of the two contingencies. Now what happened? After this bearish breakdown, asset gave a strong bullish breakout. Now still the asset did not change its structure. Intraday structure is still bearish. You can see that this is the high, lower low, lower high, lower low. Still it is bearish. But after this bullish breakout, asset made a strong green candle. Now this green candle was my confirmation to look for the bullish setups. That is because it broke this previous swing high, that is somewhere over here. It broke this previous swing high, and after that, which was given a strong follow-up by another strong bullish candle. Now because of the strong bullish candle, I waited for the consolidation to happen. Now this was the consolidation happened which triggered my entry after the bullish breakout. Now you might think, why did I book my profit over here? Because this is nowhere near any important level. Majority of the retailers will be waiting for this level, or as a matter of fact, they might wait for some other swing highs, that is somewhere over here. They will be targeting for this. But I exited exactly somewhere over here, and from there only market changed its structure once again, and it started to trade in a sideways to bearish momentum. Now let's analyze option chart once again. Now here you can see this was the bullish breakout candle which triggered my entry. Usually my stop losses will be below this swing low. In this case, stop loss was around 34 points. Now usually I keep my target of 1:2. In this case, 1:2 was around 62 points. 1:2 is around 70 points. Now once the 70 points achieved, I trailed my stop loss from this level to break even. So I don't have anything to lose in this trend. I was just thinking of riding this trend. So once the 100 points mark is achieved, I randomly booked my profit. Now why did I randomly book my profit? So let's do some simple math. Let's open the calculator. So I entered at around 267 with my profit was around 100 points. So what is the quantity of Bank Nifty for one lot? One lot contains 15 quantities multiplied by 100 points. What does it give? Per day for one lot, it is giving me 1500 rupees as a profit. Now, what was my investment behind this? In order to calculate the investment, let's see where I entered. I entered at around 267 rupees. 267 multiplied by quantities, that is 15 quantities for one lot. With the just help of 4000 rupees, you can earn 1500 rupees as a profit. It's nearly around 35 to 37% return on investment. Nowhere in this world you are going to get this much amount of return in such a less span of time. So once 100 points is achieved, I booked my profit and exited the trade, and I'm done for the day. So this was my analysis behind this trade. If you found this video helpful, please consider giving it a like, leaving a comment and sharing it with your fellow traders. Until next time, take care and happy trading.